Hello, chart watchers, and welcome to this Tuesday, June 26th Market Watchers live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we got the Dow Jones and, of course, all of our major indices trying to rebound off of the intense selling that we saw yesterday. The Dow Jones currently up 57 points. The S&P 500 up 7 points. The NASDAQ up 23. And the Russell 2000 up just under 5 points. 10-year Treasury yield really flat today, still sitting about 2.88%. Volatility has fallen quite a bit off of yesterday's intraday high. We did get back up above 17 for the first time in a couple of months on the VIX yesterday, but we are back down to the 16 level currently. Energy performing pretty well today, up about 1%. Financials are on the other end of the spectrum, though, and really testing a key area of support going back to past few months since the selling began in late January, early February. Banks, a big part of that, continuing to weaken. You can see the bank index back at that 455 area. This is an important support range on the bank's index. 450 to 455 is the level I'd continue to watch pretty closely here. General Electric trading outside the Dow Jones for the first time since 1907, and apparently they like it. Up over $1 today on some news I'll talk about in a few minutes. Lennar reported earnings, excellent earnings, top line and bottom line. The stock did gap up, but remains in this downward spiral. So even though it did gap up earlier, it's still struggling to make much more headway. Intel continuing its weakness since the beginning of the month. Intel does a lot of business in China. Apparently the trade war fears taking a toll on Intel stock. Okay, Erin, it's Tuesday, June 26th. Arthur was in here yesterday, sub for you, did a great job, but it's always nice to get you back.
I appreciate Arthur coming in last minute like that. And apparently, I don't know if you've noticed the trend, but it seems like when I'm not on the show with you, that the market tends to do really bad. I don't know. I don't know if there's any consequence there, but for our viewers, I will make sure I'm here as much as I can be every single day with you.
Hey, I'm a trend follower. I hadn't noticed that one, but maybe I'll have to go back and do a little research. And if that's the case, you're not getting any more days off.
Yeah, I would say so. I think our viewers would appreciate that if I do have some sort of magic going on here between the show and what happens with the market. I guess you can draw correlations with anything, right?
Yep. Well, I was kind of hoping that your return would maybe generate a little bit more interest in stocks. We are getting a bounce, but I'd like to see a little bigger one if you don't mind.
Okay, I'll be sure and get to work on that as soon as the show's over.
See what we can do with that, but we do have a busy schedule, so I'll let you get into the upcoming announcements and agenda, and we'll get this thing going.
Absolutely. So tomorrow we do have Scott Carney coming in from Harmonic Trader. So we'll be looking forward to hearing from him. And I know that on Thursday, we have Dan Russo from Chaikin Analytics. And on Friday, we have Everything Stock Charts with Chip Anderson. And Tom, you're doing the July seasonality report. And then I'm going to be doing the monthly chart review on the Monday following. So it should be a very interesting week. And, you know, anytime we close out the month, it does get kind of exciting to start looking forward to the following month. Okay, Tom, you're up first with the workshop on candlestick analysis 10 and 10. We're going to look at Weibo Corp, WB, and finally we'll finish off, since I wasn't here yesterday, I'll do the DecisionPoint report today at the end of the show. So let's get to those headlines. And yes, I do remember reading a little bit this morning about GE and what's going on there. So
yeah, it's an interesting day for GE shareholders. First day that they've not been on the Dow Jones since 1907. So that, by my count, it's about 111 years. And they announced that they're going to separate GE Healthcare into a standalone company and sell its Baker Hughes stake. And of course, everybody wants to know what they're going to do with their dividend. And they kind of just put that on hold. They said that their dividend policy will be addressed after the GE Healthcare separation takes place. And they just kind of hinted that they would basically look to do some sort of a dividend yield that is in line with what other healthcare companies do. So I'm not exactly sure which healthcare companies they're talking about, because you got a big wide variety. I mean, you got a lot of biotechs that either pay no dividend or very low dividend, and you got some of the pharmas that pay really high dividends. So I'm not quite sure where they're going to fit in, but that was their statement today on their dividends. I'm sure there are, like I said, a lot of traders wanting to know what's going to happen to that dividend as they move forward. But, we'll get into GE in just a second. But first, I do want to mention that the April Case-Shiller Home Price Index came out this morning. It rose 0.2%. Market looking for a rise of 0.5%, however, so it was a little bit less than expected. And June consumer confidence came in lower than expected as well, 126.4 versus the anticipated 128.1. And there's a great big collective yawn in the bond market. Treasury yields, you can see, relatively flat, sitting at about 2.88%. But we do have this short-term downtrend that remains in play. I'm not going to be overly excited until we can get the 10-year Treasury yield at least back up above that 20-day moving average. You can see a lot of times when we're trending higher, we stay above it. When we trend lower, we tend to move a little bit, stay beneath that 20-day moving average. Then we trend higher, we're above it. And now as we've kind of moved lower, for the most part, we're staying beneath that 20-day moving average. So let's hope that at some point we'll get that move back up through the 20-day moving average. And for those of you who are wondering why I would hope that interest rates are going up, there is a pretty strong correlation between the direction of the 10-year Treasury yield and the direction of U.S. equity prices, particularly the S&P 500, because when you think about it, yields moving higher tend to accompany a strengthening economy, and a strengthening economy increases corporate America's bottom line, and that in turn sends the S&P 500 higher. So normally, it may not make common sense to some when you think about it initially, higher interest rates being good for the economy, but actually it is a signal that the economy is strengthening. So I like to see the 10-year Treasury yield moving higher. Now we could move back to a weekly chart, and I think based on the weekly chart, you'll see that that's exactly what we have. This huge rally that we had in the stock market all the way through the beginning of 2018 in January, and then into, it was late January, I guess we set that high. Since then, the 10-year Treasury yield has pretty much just been going sideways, while the S&P 500 has been struggling along with the Dow. But prior to that, you can see off of the low back in July 2016 through early 2018, we had a rising 10-year Treasury yield that accompanied much higher equity prices. So very important to note that. All right, let's go back to GE, because GE is having a strong day. It is up over 8%, very heavy volume today. Probably the best day that GE has seen since back in mid-April, when it looked like it was establishing perhaps the right side of a neckline before we did get a slight breakout and then the huge down day back on May 23rd. But this action is pretty positive so far. We are doing it off of what could be considered a double bottom. And so now that brings into the reaction high as a very important resistance level as we go forward. Again, if I stretch this out onto a weekly chart, you can see huge decline. Look at where the failure was on the weekly chart, right at the 20-week moving average, and that has been a problem for GE over the past 13 or 14 months. So as we move back up, if we can clear that 15.5 area, not only would we be putting in a double bottom and taking out this intra-period high here, but we'd also be clearing that 20-week moving average, something we haven't been able to do with any gusto for the past, well, really for the last 13, 14, 15 months. And probably could even go back further than that, really, since back in January of 2017, we've really struggled at that 20-day. So some positives here with GE, but certainly not out of the woods by any stretch. Let's take a look at the home construction group. This is an interesting area because we did have a nice earnings report from Lennar. Their bottom line, by the way, and I didn't look at the breakdown, but I thought I had to double check, but I've checked a couple of different sources. They came in with a profit bottom line number of $1.58. Market was only looking for 45 cents. So I'm not exactly sure why they beat by so much, whether it was a one-time thing, but normally the numbers that come through Zacks are not one-time, don't include those one-time gains. They're normally, any big one-time adjustments normally come out of the EPS. But anyway, big beat for Lennar on the bottom line. Top line, they also beat $5.46 billion. Market only expecting $5.23 billion. So we've seen a bit of a move to the upside, but after a breakdown and it closed below these recent lows, so far all we've done is gone up and tested the declining 20-day moving average and backed off of it. If we pull up Lennar, you'll see something somewhat similar. We did have a breakdown below the May lows, came back up. We are slightly above the 20-day, and you can see the heavy volume coming in today. But I want to see a breakout. I'd like to see us get back up through 55, 56 area. You can see 56 held as major support throughout the early part of 2018. Once we broke below 56, we've really struggled getting back up even above 55. So that's where that 55, 56 level comes in. If we could get through there, I'd start to feel a little bit better about Lennar and maybe some of these other home builders. But right now, even with a very, very strong report, still seems to me like this is trading in a downtrend. So I'd be careful with Lennar. Let's see how we finish today. Banks. This is a big part of why the market is struggling right now. The bank index back down at this 450, 455 area. We've done it on multiple occasions. We've yet to close below 455, and we're currently trading at 455.30. So we are right on the cusp of a potential breakdown in the bank index. Now, we've talked about regional banks, the KRE, which is doing much better. You can see, even though we're weak, and we've had a little bit of a rough month so far in June, we're way above the lows that were established back in February, March, and early April on the regional bank ETF. So regional banks obviously performing much better than many of those, their larger money center bank types that are on the Dow Jones US Banks Index. Akamai, AKAM, they came out and lowered their guidance. And you can see it is trying to put in a hollow candle off of a downtrend, but the volume is very significant. We did see some selling over the past couple of days, and we did get that warning today. What they ended up doing, I looked at it, it seemed to me like the top end of their guidance was being reduced. The bottom end was pretty much where it was before. So they just narrowed their guidance, lowering the top part of their estimate. So anyway, the market didn't like it. Big gap down earlier. We're down 3% today on some pretty heavy volume. I think in the short term, I'd like to see it hold this 74 level. We had gapped up on heavy volume back in May, pulled back, and then we made the breakout above 74. You can see the volume had picked up. And on weakness over the last 6-7 weeks or so, we have yet to close below 74. So maybe that hollow candle can put a bottom in right at that 74 support level. Let's take a look at some of the S&P 500 components. I'm going to update this. I have all the S&P 500 stocks in a chart list. And so this is the way I like to review it because I can sort it a lot of different ways. Here you can see I've got it sorted by percentage change. So you can see General Electric and Lennar are the two strongest stocks right now in the S&P 500. Netflix also bouncing back very nicely. The other thing I like is as you see the strength here, you can kind of get a sense just off of the scooters, which ones maybe are just having oversold bounces versus stocks that have really been strong. For instance, GE, Concho Resources, CXO, both of these stocks carry scooters less than 10. So to me, without even looking at a chart, I know that they're probably more oversold bounces than anything else. Same with Lennar with the 12 scooter. But you get these stocks that have scooter ranks up in the 70s, 80s, and 90s, and this could be the resumption of uptrends in some pretty solid stocks technically. So that definitely is something to keep in mind. And just again, another way to take a look at this, if I switch it around, we can see what's lagging today in the market. Insight, a biotech. Many of the biotechs were struggling earlier when I saw. And of course, the banks, many of the financial stocks, weak today. That is the weakest sector. And you can see on the bottom list, many of the financials kind of peppering the worst performers in the S&P. All right, I'm going to turn it over to Erin. I know she has a number of upgrades and downgrades for you. Take it away, Erin.
All right, I shall. Here we are. Okay, I do have some upgrades and downgrades for you. Let's go right over to those. First one, we're going to look at two downgrades. First one is SiriusXM Holdings. And as you can see on that downgrade, certainly an intraday low that really hit hard, but we are seeing it bounce back up. It is trading near the top of the range for the day. However, of course, it's down almost, well over 1.5%. But we are seeing this area of support. It bounced off of it. I would still be concerned here, even in the short term. You have that 5 is just crossed below the 20, so that gives me a short-term trend model neutral signal. And the PMO is in free fall. You can see volume also is very heavy to the downside. So I don't know that I would look at this one as a to bottom fish here on the downgrade. Square was another interesting one, and it looks very similar in shape and size here. We've got another big drop that happened yesterday, a big gap down, and now we are trading on the downgrade. We're up slightly though at this point. The 5 is not crossed below that 20-day EMA. We do see the PMO has just triggered that sell signal. I would still watch very closely. We may need to see a little bit more downside to test this area of support. But after that, maybe we will be able to get that gap closed and head back up. But on the downgrade, that might be some waiting and wishing going on there. I think if I were owning it, I would be really concerned about it if it drops below 59, 58. CenturyLink was an upgrade, and I will pat myself on the back because it did do very well, and this was my Monday setup from last week. I hope Arthur picked a good one for me, Tom. We'll have to see. We have the PMO buy signal going on here. Right now, we're in this little trading zone, and I've marked it based on these tops here back from October and February, and then the top of this trading zone that we looked at in May. I'd like to see it pop up above. Looking at this chart, I don't see any reason why it wouldn't do that. We have the PMO buy signal ended up coming in after the Monday setup came in. It's still on a nice price rise. We could see a little bit of a pullback here when it hits this 1920 area at that top from last month, but I don't think it's going to have too much trouble. Everything's looking very healthy here for CenturyLink. At Home Group, another upgrade. And we can see on that upgrade, a big almost 6% move to the upside, gapped up. It is still in a declining short-term trend. It broke through that, obviously, and we've now moved ourselves up to new all-time highs for the at-home group. I went ahead and looked at the weekly chart and to see if we had any overhead resistance before, and we don't. After December, when it took off, it's just not looked back much. We pulled back though to that 50-day EMA, so this upgrade was very helpful with that big gap up, and it's continuing higher. I see that the PMO, it wasn't an undulating bottom here. It was a yank on this particular move today. So I would probably wait and see. We've already pulled back somewhat off of the intraday high, which was well over $40.50. So keep an eye on that one. But I think we may need a little bit more of a pullback here, and we'll see how we get that one going. Mercado Libre, another upgrade. It's really in a trading range. I don't foresee it getting out of this range. I mean, the PMO is barely moving upward. If we start seeing this PMO really give us a nice rising trend, then maybe I would get excited about this. But at this point, we're in the middle of this trading range. So to me, risk reward is not there. We have every bit as big a chance of moving back down to 280 as we do to moving up to 320. So I think if I were holding it, I'd stay holding it unless I got to drop below that 280. But with the upgrade, I think we'll do okay on that. Micron had an upgrade, formed an island right now after yesterday's really big decline. It didn't make it all the way down to test the support level at $50, but I feel pretty good about Micron. We are seeing the PMO still in decline, but I think you're going to see that island close, that island gap. This is going to form an island, I suspect, and we're going to get that move back up into that trading zone. That's what I'm looking for. And NVIDIA, same deal. Another island, I suspect we're going to see that gap close. Obviously, we're still, the PMO is not looking that healthy at this point, but I think with the upgrade, these are both strong stocks. I would start looking for closure of that gap. So, and that's it for the upgrades and downgrades. Tom, I know you've been working very hard to get your workshop together. So I'm going to pass it back to you and give you as much time as possible.
Okay, yeah. I thought what I would do today, I always get a lot of questions about candlesticks and using them in connection with other technical signals and so forth. So I wanted to kind of go over, maybe for the next 25, 30 minutes or so, just some of the techniques I use with candlesticks and some of the other technical indicators to try to come up with high reward to low risk trades. Again, I'm not saying profitable trades because you never know for sure. There are no guarantees in the market, but what we do want to do is try to set up the best reward to risk trades that we can. And I think candlesticks can help you do that. Anytime I talk about candlesticks, I like to start off with just a basic candlestick tutorial because I know many of you do not use candlesticks. That is our poll for today. Please be sure to fill that out. But essentially just looking to see what type of charts do you use, whether you use the candlesticks or the bar charts or point and figure, whatever it is. We'd love to know what it is that you look at when you're looking at price information. Here's a chart of GE. And by the way, this goes through yesterday. It doesn't include today's candle. That's why you're not seeing anything over here. It was just cut off as of June 25th. But what I wanted to do is highlight the basic candlestick structures. So here are the 4 basic types of candlesticks that you will see. First of all, this is a daily chart. So each candlestick represents price action on a day. That's really important because if you're looking at an hourly chart, then your candlesticks are going to represent each hour. If you're looking at a minute by minute chart, your candlesticks are going to represent just what took place in that minute. So here you've got 4 different types of candles. The first one is the black filled candle. It's just you can see the rectangle part of this candlestick is filled with black. The second one is a red filled candle. So it's another one of these filled candles. This one's red. The third one is a black hollow candle. So it's outlined. The rectangular part is outlined with a black line. And then the fourth one is a hollow red candle, where you've got the outline. It's a hollow candle, but the outline is in red. So quickly being able to visualize these candlesticks, in my opinion, really helps in trying to figure out exactly what's taking place in the market. I tend to follow market makers and what they do, and I think the candlesticks are probably the best indication. Once you learn to read these candlesticks, I think it's the best indication of what what the market makers may be doing in a particular stock at that moment. So let's start off with the first candlestick here. This is the black filled candle, and I've put some basic definitions down here at the bottom. But the black filled candle opens and closes higher than the prior day. Always opens and closes higher than the prior day, but the close is below the open. Now, when you look at a candlestick, the tails, these are wicks, shadows, whatever you want to call them, that come out the top of the rectangle and the bottom of the rectangle, they mark intraday highs and lows. So right here, if we were to draw a line over here, we'd say that the intraday high for GE back on April the 20th was roughly $14.90. The low was roughly $14.20. The rectangle part here is telling you where the highs where the opens and the closes were. That part of the candle body, the rectangle, always tells you the open and close. Anytime you have a filled candle, whether it's black or red, you're opening at the top and you're closing at the bottom of the rectangle. And so filled candles, by their nature, somewhat bearish because you're closing beneath the open. In this case, we had closed the prior day here at about 1390. We gapped up to the open up here at 1480, but then we came back down and we closed at 1440. So it was still a nice up day. If you were gone to work, you're not really paying attention to what's going on in the market. GE was at 1390 yesterday. You get home, it's at 1440. You think that's awesome. Great day, up 50 cents, 4%, 3.5%, whatever. But the nature of that move is somewhat jaded, I would say, because of the black candle that forms off of an uptrend. And I talked about topping candles before, so I won't get into that today, but normally you get a black candle off of an uptrend. It's normally not a great sign in the near term. And you can see that we backed off of it. So that's the black candle. Next is the red filled candle. Now the red filled candle can gap up or down, but you always close beneath the prior day's close. So the close is always below the open, and it's always a down day. You can't have a red candle, a red filled candle, and be higher for that day. It can't happen. The black filled candle, that's the difference. The black filled candle, you can finish higher. If you're lower than the prior day, I don't care where you open this day, but if you're lower than the prior day, the candle is going to be filled red. If you're higher, if you close below the open, but you're higher than the prior day, like you were here, then you're going to get the black filled candle. Okay. So filled candles, you're closing below the open. The difference between the black and the red is that the black, you still have an up day. The red, you have a down day. Now we move on to the hollow black candle and the hollow red candle. Here is the hollow black candle. Here is the hollow red candle. Essentially, it's kind of flipped what we just talked about on these two. Why would one be black and one be red? Well, similar reasons to why these filled candles are black and red. On a black hollow candle, notice that we are closing up here at the top. Anytime you have a hollow candle, you're closing above the open. Even with a red hollow, you're closing above the open. Anytime you see a hollow candle, you're closing above the open. But was it an up day? In this case, back on April, this would have been what, April 4th? It was an up day. It closed above that prior day close. And as a result, it has a black outline. Over here on the red hollow candle, you actually closed a little bit below the prior day's close. So you finished in negative territory. So you closed above the open, but you were still down for the day. That is why you've got the red outline versus the black. Now, hollow candles tend to be a little bit more bullish. Filled candles tend to be a little bit more bearish because it just tells you that they're selling. The filled candles are telling you there's mostly selling, more selling during the day than buying. Hollow candles tell you the opposite. So you do tend to see hollow candles many times mark bottoms, and filled candles many times will mark tops, just in general. Now, there are a lot of different candlesticks. I focused before. I did a workshop, I don't know, probably a couple months ago on when to sell. And I focused a lot on reversing candlesticks at the top, like these shooting stars. So I'm not going to do that today. Today, I want to look at some of my favorite bottoming reversing candlesticks. So first up, and one of my favorites, the bullish engulfing candlestick. Now, bullish engulfing candlestick, keep in mind what we just talked about on the basics a minute ago. Here is a hollow candle. A bullish engulfing candlestick, when you really want to be interested in these, is number one, off of a downtrend. If you're going to reverse a trend, you have to have a trend to begin with. So this is a bullish engulfing candle off of a downtrend. What is a bullish engulfing candle? Well, it's a candle where you open beneath the prior day's candle body. So right here, you can see this prior red candle. We opened at the bottom. We know the open's at the bottom because it's a hollow candle. We close above the open on a hollow candle. You open down, you close above the prior day's candle. You completely engulf the prior day's candle body with the bullish engulfing candle, with the rectangle here. So off of a downtrend, you want to see that reversal. You're clearly closing above the prior candle body. This is a reversing candle. It helps to have heavy volume. And you can see in this particular instance, we did have heavy volume on the reversal. That volume bar really picked up. Why the heavy volume? Well, for me, it's about why would anyone on this downtrend, on the gap lower, be buying? The stock is clearly in a downtrend. It's gapping lower. It looks like it's going to continue to move lower. Why would anyone buy? Well, market makers, if they have clients, customers, institutional clients especially, that want to get into shares, it takes volume. You can't buy a fairly sizable position in a stock without there being volume. It's one of the reasons why I have to have volume on my charts, because otherwise I don't know, if this volume, instead of being 1.5 million, had been 150,000. Well, yeah, it's a bullish engulfing candle, but how many shares were actually purchased? Is this an initiation of a big position by an institutional client? Well, without volume, it's very unlikely. So that's why I want to see the volume. So here was a beautiful move down where we had a bullish engulfing candle and right back up to challenge the prior highs. So nice reversal there. Now, the other thing you want to look for is you want to see corroboration with other technical signals. And here you've got a 50-day test. Also, if you come across here, you've got price support that's coming in pretty close as well. So as you gap down, one of the things you might be looking for is, if you get in or you're starting to accumulate a position on weakness, you might be looking for confirmation by getting one of these reversing candles. Another few weeks later, you can see off of this downtrend, another reversing candle. This one, however, didn't have a whole lot of volume. It worked, but it didn't have a whole lot of volume, so I wouldn't pay nearly as much attention. Let's go through a couple of other quick examples on the bullish engulfing candles. Here you can see gap support. See the big gap up on heavy volume back on May 29th? Big gap up, came down, black candle. We did come down the next day, got close to gap support, went back up, tested resistance, and then came back down. Bullish engulfing candle right at gap support and right at the 20-day moving average. That is a pretty good sign on a stock that appears to be under accumulation. So that is certainly a candle I would pay attention to. Anytime I test the 20-day moving average during an uptrend, I'm going to be somewhat interested in a stock, and you can see this one continues to perform extremely well. Next up, Mirati Therapeutics, MRTX. Here you can see off of a downtrend, major price support coming in here just above 25, about 25.5. We gapped lower. Look at the volume on this big reversal, bullish engulfing candle off of the off the downtrend. It started basically at price support just above it, and look at what that led to. Now, you don't know when you get these candles where you're going to go to the upside. I would still be looking at prior highs as maybe my target from a short-term trading perspective. But when you look at charts a lot of times and you see a big move to the upside, a lot of times it will coincide with a prior reversing candle. Denbury Resources. Look at this move to the upside. There was a topping candle. That's a dark cloud cover. Came all the way back down. Actually, two bullish candles back to back. I'll talk about hammers in a minute, but really we had a hammer on the 20-day and then a bullish engulfing right on the heels of it before making another push back to the upside. There's another example of a bullish engulfing candle. Next up, hammer. We just mentioned the hammer, so let's talk about it. First of all, a hammer follows a downtrend. Now, you might look at this and say, well, it only went down maybe 2 days after it reversed here. Think about it on a percentage basis, though. This stock was trading up at about 1530 intraday, and the day the hammer printed, it went down below 1350. So it was probably down about 14 or 15% in 2 days, and then prints the hammer on the 20-day moving average, also after testing price support. Now, it is up a little bit today, up about 1.6%, but this is definitely a reversing candle that I would be looking for off of a downtrend. So what is a hammer? Well, it follows a downtrend. The candle body is in the upper third of the candlestick. So you can see the candle, see how that long tail to the downside? Essentially what you're doing is you're hammering in a bottom. You go all the way down intraday and then you reverse back up. It looked like a big breakdown intraday only to come back up and finish strongly in the top 1/3 of that candlestick. The long tail to the downside signals the intraday reversal. And if you get heavy volume, I like these candles even more. Now, in this case, volume was just kind of so-so, wasn't huge volume. If we had been more at a price support level, for instance, if we had put in a hammer here with a long tail beneath this price support, that you might have seen more selling, more stops being triggered, increasing the volume, and then the reversal becomes much more significant. That's why I like hammers, because a lot of times these tails go down below key support levels where you and I would never be interested in buying them at those points until we see the reversal. And a lot of times that reversal is a signal that market makers are back on the long side on a trade. So let's take a look at a couple other hammers. Here was Weight Watchers. Weight Watchers back on May the 4th had moved up to resistance at about $76, reversed, and the very next day was moving all the way back down to about 66 before putting in a hammer and finishing near $70. Off of that downtrend, look at it hold that rising 20-day moving average from there. And usually on these hammers, what you want to do is consider a stop below the tail. Once you move below that low on the hammer, that is a signal that is no longer in play. In this case, we never went back down there, and you can see a big move up to the upside. Went through resistance, tested support, and then back off to the races again. All right, bullish piercing candle. I'm not going to spend much time on this, but essentially what it is it's a bullish engulfing candle that never quite gets there. So you can see we don't completely engulf the prior day's candle body. Instead, we finish in the upper half of it. So if we could have just gotten a little bit more, we'd have had a bullish engulfing candle. So to me, bullish piercing isn't quite as bullish as a bullish engulfing candle because you don't take out the prior day's high. But if you do get one of these and it's on reversing or fairly heavy reversing volume, then many times that can print a very significant low. Bullish piercing candles, they follow a downtrend just like any other reversing candle. You get an open below the prior close and you close in the upper half of the prior day's candle body. So I refer to it as a wannabe bullish engulfing candle. Didn't quite make it, but close. Heavy volume adds to the bullishness. In this case, volume was pretty strong on this reversal. Stock had traded intraday down around 22 and change off of a very long downtrend and then reverses, finishes all the way back up 2360. And that leads to a period of upside action. Now, we are still in the confines of a downtrend here. So when I see a reversing candle, I'm not thinking bull market. Reversing candle in a downtrending stock is not the same as a reversing candle in an uptrending stock, in my opinion. And you also want to look for corroborating signals. Now, in this case, we had a signal of a possible reversal, but the PPO was lower than prior, so I don't have a reversing, or I don't have a positive divergence in play. If I had played this, I probably would have been out if I had a 20-day test. Here, we went actually a little bit above the 20 on some fairly light volume, and then the selling resumed. Now, on this selling, we did end up going down, putting in a lower low with a higher PPO. So that is just one way to kind of look at the action, not just the reversing candles, but also some of the other technical indicators that you like to follow. Next up, I'm going to go through a watch list. So we took a look at the basic candlesticks, looked at some of reversing candlesticks. Now I'm going to tell you how I approach the market. If I was putting together a watch list, number one, what you're going to find is many of these companies are either small or mid-cap stocks because I expect to see continuing leadership from these types of stocks. The other thing that I think you're going to see on all of these stocks, or most of them, is I've added the scooter. And the scooter just gives us a general sense of how a stock's been performing relative to its peers. So anytime you get a scooter up in the top quartile, 70, 75 or higher, it's telling you that these stocks are performing much better than the majority of stocks out there and are among the leaders, they are a leader among their peers, or one of the leaders. So, but I don't want to just chase. I mean, you can see Fitbit here, ticker symbol FIT, huge move up in June, big volume. You can see it got very overbought. The RSI was up in the mid 80s. I don't like buying in that type of an environment, but it's pulled back over the last 2 weeks and is now getting a test to the 20-day. If I could get a hammer, something where I, show a big move intraday below the 20-day moving average, but then come back up and close above it, or maybe I gap down at the open beneath the 20 and then come back and print a bullish engulfing candle, then I think Fitbit becomes a potential trade candidate. I love the volume trends, love the scooter, love the PPO, which was rising on the most recent high. I like to get these on pullbacks. You can see the RSI now is back in the 50s, much more palatable than the mid 80s. So Fitbit, to me, is an interesting possibility. So I would put it on a watch list. Another stock, Nutanix. Nutanix, I don't know how you pronounce it, but NTNX. You can look at the scooter, first of all. It has been up in the 90s almost without exception until a little bit of a move lower with some selling back at the end of May. And now we've seen volume pick up again. And now the scooter's all the way down to 80. And price action is getting very close to a couple key support levels. RSI is back down at, well, 36, which is even a little bit lower than that 40 level that I like. So if we could get a reversing candle off of this downtrend and it happened to coincide with support levels, I think this could become a short-term trading candidate. So NTNX is something I would watch. Now, a lot of volume the last couple of days. I don't know what the volume came in for. Could be a secondary offering, and I don't think it was earnings related, but maybe it was. I would pay attention, maybe go back and do a little homework on that as well. But technically, I'm okay with this stock as long as it holds this support area between about 47 and 49. So as we get down into that area, if we see a reversing candle, I can keep my stop very tight for a possible bounce here. Box Inc., ticker symbol BOX. Another one broken out. Scooter. This one, the scooter's 65, but it's been above this 70, 75 area most of the past couple of months. Did make a big breakout recently. There's a bearish engulfing candle, which is short-term bearish. But now we're back down to where we had printed a hammer before. This is also the area where we broke out at 24. So as we move into this zone, I'd begin to start looking for reversing candles. GERN Corp, GERN. Another one that I think looks very, very possible in terms of a long entry. Clear price support at about 325. Stock today got as low as 337. It's getting close. A tail going down below these support levels and holding, coming back up and closing above, to me could be a sign of a quick move back to the upside. So I think GERN deserves to be on a watch list. TXMD. TXMD, actually, we might be getting a reversing candle today at support. This could be, it already is at this point, a piercing candle. It's not a bullish engulfing candle, but maybe it will be by the end of the session. But here was your breakout. Look at the volume coming in, taking out $6.70. We've come back down now on a couple of occasions to this 670 level. It looks like we're trying to reverse off of it. TXMD, I think, is one worth considering. All of these, again, are fairly small stocks. So these, I'd be careful about position sizing, but they do present quite a nice reward opportunity off of key support, especially with reversing candles. EXAS, this is Exact Sciences Corp. Nice breakout. Another one with the scooter, currently up at 86 and change. It's been up in the 90s recently. We've pulled back the last handful of days. This is a stock that was up to about 72 less than 2 weeks ago. Now we're at 64 and change. That's a quick 10% haircut. The RSI, which was extremely overbought, now back into the 50s. And as we get down closer to the low 60s, you can see trend line support and a couple areas of price support that come into play. So EXAS is one I would keep on a watch list. Look for a reversing candle. OKTA. Look at the scooter, 94.8. And it has been up here for a long time as we've continued to move up. This sideways consolidation has taken the RSI down to 42. We're at very serious price support level. And volume on the moves back up here, this volume has been pretty strong as we hold on to price support. So if we could get an intraday move below, say, 47.50, looking like it's going to take out the prior lows, and then a reversal, come back in and close above, that could be a great sign for entry. Just a couple more of these. Chegg Inc., CHGG. Another one, look at the scooter. Hanging up in here in the 90s, 94.4 right now. Last 4 or 5 days, we've seen a little bit of selling on volume moving down. As we were moving higher, the PPO rolled over. Negative divergence. I look for a 50-day test when that happens. So a 50-day would be about 26. And if we connect these lows, trend line comes in above 25. So I think 25, 26 looks interesting. And as we get closer and closer to that level with a target up in the 29 to 30 level, you can see where a reversing candle as we get closer to support would make a lot of sense here. TWLO, TWLO, another one moving higher, great scooter. We did have a negative divergence, higher prices, lower PPO. Now we're below the 20. I think there's a chance we go back down here to the 50 to test. And we have a very important gap support level, top of gap support. When I get a candle looking like this on very heavy volume, I use the top of gap support as major support. So I think the 48 to 51 area here, I know we're at 56, but if we continue to see weakness here, it could set up a nice reward to risk trade on Twilio. Finally, last stock I have is GrubHub. Grub, been on a really difficult move to the downside. Stock was at 120 just about 10 days ago, and now we're back down at 103 and change. That's a pretty significant 14, 15% haircut. We got some initial price support that comes in around 100, and then I consider very, very significant support down around 92, 93. So for those who are a little bit more risk tolerant, as this stock moves down into the 100 or even into the mid 90s, I think this area becomes an accumulation zone. A move below these support levels and a reversal, some sort of reversing candle at these two support levels, I think would be extremely bullish for GrubHub. So something to watch as we move forward. Okay, let's summarize what I went over. Really just trying to bring together candlesticks, utilize candlesticks in conjunction with other types of technical indications. So whether you use moving averages, whether you use trend lines, whether you just use price support, candlesticks can provide you a really, really strong area of the market to consider for a reversal. Okay, well, we do have the poll, so maybe we can bring the poll up first.
Sure, and just a quick question on that watch list that you showed. Have all of those stocks also met your earnings, the beat criteria that you use, good earnings chart list?
No, I did not do anything with the strong earnings on this particular
watch list.
Yeah, I mean, really, only thing I really looked at here was the small cap and mid cap scooters, and tried to pay attention to those that were very high. I know we've had a lot of selling here, so I thought maybe we might see some opportunities developing in some really strong stocks, because a lot of times the baby gets thrown out with the bathwater, and some of these really strong stocks, you want to get them in pullbacks. And if you can combine some of the weakness, these downtrends, with reversing candlesticks, they can set up some nice trades. So that was the whole idea and purpose behind the watch list.
Awesome. Yeah, that was one of the questions. And somebody did say, explaining the difference between, a predefined time period versus a fill the chart setup, and, why are they different? Well, depending on how you set up your chart type, like how many bars you want on it, are you using candlesticks versus OHLC bars? Your fill the chart is going to have a varying time frame. It may not be exactly 1 year. It may not be exactly 6 months. So it's just a matter of what you prefer.
Absolutely. Here is the poll, and I'm a little surprised. I mean, I'm happy, but I'm surprised. I didn't think that we would have so many folks that were using candlestick charts. I love them. I outside of price and volume, I think that would be one of the things that I would really struggle with giving up. I really like the candlesticks because they help me visualize what's taking place in the market. It's just so much easier for me to quickly see whether or not, for instance, a stock, when it gaps up, does it continue moving higher? Well, that's what those hollow candles tell me. Now, I haven't used the, the candle volume bars. I think those are kind of interesting too, where the candlestick gets much wider depending on the kind of volume that you have. I think that could be really, really interesting, but I haven't used those in the past. Mm-hmm. But I'm surprised that there aren't more that use bar charts or point and figure as their primary. I'm not at all surprised line charts are 1%, though. They really don't show you much of what's going on.
Yep. And, as everybody sees, I usually do use bar chart, OHLC bars. And, really because my trading style tends to be more intermediate term rather than short term, candlesticks are great for very short term. Those are quote unquote chart patterns, but they're good for a day or two based on what you see in them. So that's, so I kind of grew up not using those. And, You know, it's a comfort level for me. But if I am looking on the very, very short term, I think a candlestick chart is invaluable.
Absolutely. Absolutely. I couldn't do without them. That's for sure. Okay, let's go ahead and summarize then the candlestick analysis that I did. Just a quick illustration. You can see the reversing candles that we talked about, and then the watch list. We'll see how they perform. Maybe just keep an eye on those as we go forward, and maybe start to learn a little bit more of about candlesticks if you're not as familiar with those. Okay, it's time to move on. So why don't we jump into the 10 in 10?
Absolutely. And I have these ready to go here for us. We had about 27 requests. I think there might have been a few that came in just in the last minute or two, but sorry guys, it's too late. Be sure and like the symbols that other people have requested so that you'll get to see that as the number 2 symbol, even if we looked at it recently. So go ahead and do that. And I will just show you very briefly this RRG. Mainly one of the reasons I like it is I can check out which sectors everything's in. And as you can see, lots of tech. So we'll likely be looking at a couple of techs for sure in the 10 and 10. So go ahead and let's get started with our first one, Weibo WB.
All right, WB. All right. WB. Well, wow. That reminds me of Weeble's Wobble. But this one does fall down apparently because this one went down below the 100 level, which had been holding us some support. That's where we bounced from. But right in here at 100, you know, if there's one maybe positive, it's that as we broke down, I would have expected really heavy volume. Volume did pick up. It's not light, but it's not overly heavy. So I give it maybe a little bit of hope to bounce back, but I think if it gets back up near 100, it's going to be testing that falling 20-day and price resistance. So I'd probably be careful and also check out the PPO, which has now been below center line support for below that 0 line for the past 2 to 3 months. So not good action here, and it is in that financial space, which has not been performing particularly well. So I would just say kind of watch that 100, 101 area.
All right. And the most popular in the chat room will be Amazon.
All right, we haven't looked at Amazon in a while.
Exactly.
And of course, we did get some right at the top there is when the Supreme Court came out and announced that states could collect sales tax from online retailers. And I think overall, Amazon has held up well from that. You do have some support. I believe as we made the breakout above 1640, I think as we come back down, we're probably going to see buyers coming back in on Amazon in this area. This is a really strong stock. It takes a lot to get a bunch of selling going on. If we were to break below the 50-day, then I think we could potentially go back all the way to gap support down around 1520 or so. But I'd have to see this area of support break along with the 50-day moving average before I would look for that.
All right. Next up, our only consumer staples sector stock, Lamb Weston Holdings, LW.
Yeah, right now I don't like this candle. I'd be careful. I know I just talked about bottoming candlesticks, reversing candlesticks, but when I did the when to sell workshop a couple of months ago and I talked about reversing candles, what we want to be careful about here is clearly we have a trading range from about 63.5 up to about 68.5. Now, if we can get this breakout and close above that prior high, then I think we have a shot to continue this move to the upside. But if we leave that long tail up above resistance, come back down and close beneath it, I would look maybe for at least a move back down to test the rising 20-day. So I think today's candle is going to make a big, is going to have a big impact on the short-term direction of LW.
Okay. Next up, let's see, only materials sector, Steel Dynamics, STLD.
Yeah, a lot of tails down here around 46, maybe even just below 46. So I think that is at least setting up some short-term support. The problem is we're getting ready to get a death cross, the 20-day moving back below the 50-day. So that just put a little red arrow to show you what I'm talking about there. But here you can see the 20 getting ready to cross below that 50-day moving average. So any kind of an attempt back to the upside, we're going to have to get through that 48 area and get through both those moving averages. So that is the top of the trading range. And then recently we've been holding on these moves from closing support, 46.5, down to intraday support, which looks like it's maybe about 45.40. So this has been the key support area. Here's your resistance area. I think we're just waiting to see which way this breaks.
All right. Next up, BT Group, Telecom, BT.
Great. Downtrend. We are starting to show a little bit of bullish signs. So I think what I would do is I wouldn't want to see the downtrend to resume. So now that we're back up above the 20-day, you can see we went above the 20, came right back below it, and then went up above it again. We need to hold the 20-day. It is starting to turn back up again, but we are getting close to centerline resistance on the PPO, and we've also got a couple of areas that I would pay attention to as we move higher. We gap down, taking out prior support at 1550. That becomes resistance. And then look at the volume that came in on this gap down. The selling started at $15 and went down to about 13.5 before we started to rebound. So I think as we move up, I believe we're going to run into some serious overhead resistance in the 15 to 15.5 area. We got some more room to the upside, and I'd be okay trying to get that. But if we close back below the 20-day, I'd be careful because you are in a stock that's downtrending.
All right. Let's go ahead and look at Google, Alphabet. We haven't looked at that in a while.
Yeah, I think, well, I know we looked at it yesterday, but it wasn't as part of the 1010. And of course, you didn't know that. But Google, you know, it's holding on to support. I think both Arthur and I were looking at maybe 1100 to 1110 when we talked about it yesterday as a possible area of support. I don't know if it goes all the way back down there. I think it just depends a little bit on the overall market, whether or not we're behind all of the selling that we've been seeing in June or whether it's just starting. But if it does continue, I would expect 1100 to 1110 to be pretty good support here for Google. I did mention, and this is what I was just talking about earlier with one of the stocks, but there is a reversing candle. That is a shooting star candle where you leave a long tail up above resistance. See the high over here? And see how intraday we were above it, and then we came back down and closed below it, and then look what happens afterwards. So that's why when I see this type of a candle, I expect maybe at least a 20-day test. In the case of Google, I think your resistance is clearly marked now around 1190 to 1200. And I think you got really good support down 1100 to 1110. So as you move down closer to that level, I really like the reward to risk on Google.
Okay. Let's look at HP, HPQ.
All right, HP. Oh, it's HPQ. Sorry, I was.
Yep. Well, we had both of them actually requested, but I picked the other one.
Let's see, HPQ. I think they came out and they either upped or initiated a share repurchase agreement, I think, if I'm not mistaken. But we are starting to trend higher. So I think I would trade this as an uptrending stock, meaning that the most recent high right here, we broke out pretty good volume in here. I think if we pull back 2275 looks interesting. Ultimately, I would like to see a test all the way back up at about 2440. Notice that bearish engulfing candle right off the uptrend. There's another reversing candle for you. But yeah, I think 2275 up to maybe 2450 is the trading range. So as we get closer and closer to this area, I actually like HPQ on the long side.
All right. Next one, FireEye, F-E-Y-E.
Okay, a lot of weakness here. Recently, I don't like this breakdown, especially with the increase in volume. So let me show you that. So anytime I see a stock like this that has pretty good support coming across here at about 1640 and then loses it and does so with increasing volume, that is generally not a good sign. So I am a little bit more bearish here. And I'm going to say the next key area on major volume back in February. Look at that heavy volume, over 20 million shares. We gapped up to 16, pulled back, closed at 1540. We have not closed below that level since. This would be an interesting area for FireEye to maybe print a reversing candle off of this downtrend. But even if it does to the upside, it would be a quick trade for me, and any kind of a test of that rising 20-day moving average would get my attention.
Okay, let's look at a mortgage REIT, Arbor Realty Trust, ABR.
Okay, well, as you've said before, Erin, and as Arthur mentioned yesterday, some of these REITs having very strong moves to the upside. And you can see that ABR is certainly one of those stocks that's continuing to perform really well. Last breakout came on, well, I'm going to say about 2 weeks ago, 2.5 weeks ago. And that is where volume picked up right here, and we cleared the prior high at 960. So I think you've got great support down at 960. And even prior to that, if I wanted to build a position, an initial test of the 20-day moving average, I would find quite palatable for entry as well. So these are the two areas, the 20-day moving average and then price support at 960 are the two levels that I would be considering. And if you go back and take a look at, let me draw another trend line or a support line in here. This was a perfect example of breaking out above a prior high, heavy volume. Notice that the pullback doesn't come all the way back down to price support. It only comes to the 20-day and then continues moving higher. So that's why I say these are the two levels to watch. We may not get back down to price support. I think the rising 20-day offers up pretty good entry as well.
All right. And our final one is in the energy sector, Valero Energy, VLO.
All right, negative divergence catches my eye at the top. So I was annotating this one. I mean, we could start over here and draw it across, but even just taking these last two highs right here. And the other thing that kind of stands out is with a negative divergence, look at that shooting star candle with that tail up there. So that's a reversing candle with a negative divergence. That's normally a problem. So what I'm looking for at that point is a center line test and a 50-period test. Sometimes negative divergences can mark a long-term top. Sometimes you just have to let the slowing momentum play out and then resume the uptrend. In this case, it looks like the former, though. We are breaking down below the 50-day moving average. The PPO looks really weak now. It's gone into negative territory. And this selling is not on light volume. So I think that we've got a shot maybe to go all the way back down to the breakout that we saw in April above $98. We're sitting at 110 and change right now. Recent high up at 125. This is the area that I would be watching. And to the upside, I think that again, now that we have price momentum, bearish price momentum accelerating to the downside, let's watch that 20-day moving average. We're getting ready to get a death cross, and any test, you can see recent tests of the 20 have failed. So to me, until we can get back up above the 20, I would use that as very significant overhead resistance.
All right. That is 10 symbols in about 10 minutes. I think you actually did it pretty much right on time. Here are the ones that we covered. I will have these up in the Market Watchers Live chart list, and you can find that chart list by going to the blogs tab and clicking on the Market Watchers Live blog. You'll find the link at the very top, as well as if you click on any of the Market Watchers Live recap articles, the links are also within every recap. We'll be right back with the final market update after this message.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.
And now let's have our final market update and see what's been going on since we started the show. We can see that the markets, have been rising very steadily, but very, very slowly. We're in a nice rising trend right now. If you look at the Dow and the S&P, NASDAQ is also starting with a rising trend, tested yesterday's close, but is moving back up. See, mid caps actually started the day in the negative side, but are rising and currently getting ready to test one of the intraday top we saw yesterday. Russell 2000 traded mostly sideways this morning, but is now making a very nice run to the upside, up 12.19 points. The TSX Canadian markets are on a very steady and nice price rise after yesterday's very difficult decline. You can see Treasury yields mostly unchanged, but up slightly at 2.878%. Commodities, big move higher, but pulling back at this point from those intraday highs for DBC. UUP, the dollar is up, gapped up, pulled back, but is right back up there testing the intraday highs, currently reading 24.94 USO. Big day, nice rally upward, and I'll be talking about that during the DecisionPoint report later. You could see that oil, though, is breaking out and is looking pretty good right now. Gold gap down and is continuing lower. It looks like the reverse correlation between the dollar and gold is kicking back up at this point. We have the VIX moving lower, and we can see that we're reading currently at about 15.49 on the VIX. So we did have quite a rise yesterday. I missed that, but you know, we're pulling right back down. It looks like people are finally, you know, taking a breath after the difficult day that we had yesterday. And that'll conclude our final market update. And Tom, did you have anything you'd like to add while I get ready for the DecisionPoint report?
Sure, I'll just go over real quick the one of my favorite ratios, the XLY versus the XLP. I like to follow this regularly. And maybe for those of you that are not familiar with it, I can just explain it very quickly. But back in 2007, you can see that the S&P 500 down here on the bottom was moving higher. And you see how this ratio was falling apart. Money was rotating away from the XLY and toward the XLP when the market was rising. That's what I always look for. Now, when you look at pullbacks in the S&P 500, like we saw in 2010 here, notice the ratio comes down. That's fine. Money rotating out toward consumer staples during pullbacks in the market's not a problem. We saw it again in 2011. The S&P drops, the ratio drops. In you know, one of the bigger drops that we've seen during the bull market back at the end of 2015 into 2016, you can see a pretty big drop there as well. But notice as we break out the new highs, this is what we want to see. We want to see things continuing to perform well. What I find interesting, though, is over the past few months, as the S&P has really struggled, money continues to go into the more aggressive XLY. That's why, for me, this isn't a bear market, or that's not even, I'm not even considering the thoughts of a bear market at this point based on what's taking place under the surface of the market. So I just wanted to, you know, when you look at this starting to roll over, I just wouldn't be concerned about it because we are seeing a little bit of weakness in the S&P 500, and pullbacks in this ratio are normal during selling. It's really what you don't want to see is the S&P breaking out to new highs and seeing this fall apart to the downside. So I'll send it back to you, Erin. I know you've got the DecisionPoint report. So what's the latest there?
All right, let's get this going. Okay, I'm going to start right off with the DecisionPoint scoreboards, and you can get to those from your member homepage. Just click over here on any of these tiles that you can put on your member dashboard, and you can get to the DP signals right here. So I wanted to point out a couple of changes that we've had yesterday. Actually, we did get 3 different signal changes coming in. First, on the S&P 500, you can see that we lost the short-term trend model buy signal. I'll be showing you that chart so that you can see what triggered that. The OEX S&P 100 also lost its short-term trend model buy signal and has moved into a neutral. Interesting was the NASDAQ. It has been enjoying on the upside trend, PMO momentum. It's been all green, and now we're finally starting to see a little bit of deterioration here with a new PMO sell signal for the NASDAQ 100. All right, so I'm going to go next, and let's look at the charts for this upcoming week. I'm going to go ahead and I'm going to start with our the scoreboard indexes, the big 4. One of the things I've been watching very closely, and this is the Dow, are these rising trends on the PMO. And, you know, we were able to maintain those rising trends, but we're now seeing those broken. And that does actually concern me. I have been looking for a bounce at this point. I knew this week, I had a feeling, well, based on my charts, I was looking at this week moving lower. I think we may still have to do that or consolidate sideways, but this has me a little bit more worried as far as the intermediate term is concerned, as far as the Dow. Let's go ahead and look at the others. The NASDAQ 100, obviously one that we've seen a lot of strength from, managing new all-time highs. Well, the other three indexes have not fared quite so well. You can see that the rising trend for the PMO on the NASDAQ 100 is still intact. And it's found that support area here at that May high that we saw before the breakout at the end of the month. And it looks like it's going to hold that, but I would look here in the thumbnail and you notice that the 5-day EMA is just about ready to cross below that 20-day EMA. That means we're going to lose another green arrow on the NASDAQ 100 scoreboard, and that is the short-term trend model buy signal. If we get that downside crossover, that's going to give us a short-term trend model neutral signal. These PMO sell signals are certainly concerning. And like I said, I was not going to get myself too worried about those as long as that rising trend would hold. But as you can see on the S&P 100, it has failed. We already saw on the Dow that it has failed. And now we're getting back down here. We haven't actually gotten down to test that support level on the S&P 100 at that May low. And I'm looking at this, there's that short-term trend model neutral signal, the broken rising trend on the PMO. You know, I thought that we would be able to get away with just a little bit of a pullback and some consolidation. Of course, we got a major pullback yesterday, and we're not seeing any strength building up, really. We're seeing a bit of a bounce here, but I would be a little bit concerned that this is, I don't want to call it a dead cat bounce, but just a reaction bounce to a very difficult decline that we saw yesterday. But I'm starting to get the feeling, based on these rising trends being broken on momentum, that we could be looking for a bit more downside when we're looking at the major indexes and markets here. And here's the S&P 500. And again, broken rising trend on those PMOs. Big time problem. And of course, the sell signal came in earlier. And we didn't actually get down and test a support level that probably needs to be tested still. There is that 5-day EMA crossing below that 20-day EMA. I think the markets still look very weak. And despite the bounce we're getting today, I am still very cautious. Here's one of the reasons I want to show you our short-term indicators. This is a real problem. We have these indicators. Looks like it had appeared they were bouncing up. You know, we were going to get the turnaround as we consolidated here, but instead, of course, we got that very, very deep decline yesterday, and that has put these indicators in a free fall still. We're now giving up these lows that we saw previously last month, and we're getting ready to test those lows that we saw at the end of April. By looking at this, the bad news is that they are still in decline, and that's bad for the short term. However, I think the Pollyanna, let's look on the bright side part of this would be the fact that we're getting oversold. And in terms of the near term, we are oversold. And so if we have the kind of strength that we need to get these indicators back up, you know, we could get that bounce. But like I said, the fact that we had, you know, failed to do that previously and now are resuming that decline makes me very concerned. We'll have to see these update at the end of the market day. So after today's bounce, we'll have to see what ended up happening. Are we going to get that turnaround? I suspect not. I will be writing the DP alert tomorrow, And I will be going over these indicators. So we'll have more information tomorrow, and you'll be able to get a better idea of all of us based on the short-term indicators, whether we're getting back some strength. As far as the intermediate term indicators go of our indicator sets, the ITBM and the ITVM, these have been in a rising trend. They are still somewhat in a rising trend, but like the PMO, we're starting to see that rising trend being tested. And in the case of the ITBM, I did not actually annotate it here, but it is being broken slightly. We need to maintain that rising trend. You know, it was bad news to get those negative crossovers, and it led to some more decline on here. And now we're seeing some readings. Notice on the ITBM, we're now looking at reading lower than the last low that we printed at the end of May. So I want to see these indicators turn around. It takes them a little bit longer than the short-term indicators to make that move back to the upside. And it doesn't look like they're very interested yet in making that turn. So another reason to stay cautious right now in the market environment that we're looking at. As far as market condition, we can see the deterioration in the short term and the intermediate term. We can see the deterioration on price trends because we are seeing those short-term trend model signals, the buy signals are going away. So we're seeing both price trend and price condition for the market failing now and being and deteriorating still. They're soft. So we need to be prepared for a test. Like I said, I would be looking for a test, and I'm going to go back to the S&P 500 chart. I would still be looking for a test at that 2675 area. I don't think we're over. And mainly, like I said, because I'm seeing momentum really starting to die here with the fact that the PMO has broken the rising trend and continues to break that rising trend. Let's go ahead and look at the big four now, dollar, oil, gold, and bonds. And then we'll look quickly at the ultra short-term indicators, but I want to finish on that chart. All right, we're looking at UUP. You know, we got the breakout in a big way after testing that 20-day EMA successfully and managed that huge move up. But we pulled back like the market. It's pulled back quite a bit. We're heading back up, and now $25 for UUP is going to pose some near-term overhead resistance. The PMO had that buy signal. Things were looking good with the breakout above 25, but the signal failed rather quickly, and the PMO is still moving lower. If we can see that PMO after today's bounce pick itself back up, maybe turn to the upside, I might have some, I would feel more bullish about what's going on with the dollar. But right now, I think there is going to be a bit of difficulty right here in that 25.10 area for UUP. I'm not expecting a big time breakout above 25.10 at this point. I just don't see that when you've got a PMO that is still declining. The price momentum is still not looking good for UUP. All right, let's move to gold. And like I said, so the dollar I'm feeling, you know, rather not, I'm feeling bearish about right now in the very short term. And I'm going to pull down here for the gold chart. I look at a very short-term correlation, a 20-day moving average of the correlation between gold and the dollar. And typically, as you can see, in the very short term, especially if we move this to a longer term moving average, you're going to see the reverse correlation is clear, and it usually sticks for a while. When we look at the shorter term correlation, we are going to see these peaks and valleys. Right now, in the very short term, we're looking at the reverse correlation between gold and the dollar to be very strong. So if we find that UUP struggles at that overhead resistance, I suspect we're going to see gold find some support and hold on to it for a little bit. However, I can't get really bullish on gold. I can't look for that breakout above that 1280 area when I have a PMO that is looking very sickly. The best case we could hope for would be if we get the PMO to bottom today, which is not going to happen. Gold is down today. So we're going to end up with a lower low on that PMO. And to me, that will be confirming this declining trend that we're seeing in gold. I would not expect to see a break above 1280, but it could enjoy a little bit of a rally if the dollar isn't able to get things kick-started in the shorter term. Let's look at USO, oil. And as I was saying during the final market update today, nice breakout on USO, big time breakout. Yesterday it tested overhead resistance and failed to get above that $14 mark, but we can see today no problem with that breakout. It's actually closed this gap that we can see back here. I'm going to actually move this to a 6-month chart just to give us a different peek in on this, and we'll make these bars a little thicker. There we go. So there you go. We can see that this gap is now closed. I think that's very positive for USO and oil. I would expect to see this rally continue. Look at the PMO. Nice buy signal here coming out of oversold territory. Would have liked it to have not gone below the zero line, but it did, but it's turning back now, and we got that buy signal. I think we're looking at some good news for oil. I would expect to see, like I said, a move up past that 1460 mark, could get up to the 1480 area. When I look at this chart, it's looking very positive. Look at the scooter back up in the high 90s, 99.1. TLT and bonds, when I looked on my summary yesterday of the markets, this was the only green one that I saw. So I thought it was interesting. We have, bonds did quite well yesterday, despite the markets being down. And we're seeing it really not much of a change currently, up only 0.02% for TLT, sitting at 120.83 currently. The PMO has not been that impressive, but it is in a rising trend. We are now seeing a higher high than the previous high, so that is good for TLT. We can see also the scooter has been rising. We've got OBV is slightly rising. I was talking about this intermediate term trend model buy signal coming in late back when it came in, because it did. It came in on this right near this top, and I knew it was late, and I wrote that it was late so that everybody knew that, yes, the signal came in, but don't expect to see it, see any action on it right away. Well, we finally are getting the action off of that trend model buy signal, and price has continued higher. We're now consolidating here with TLT. We're finally trading. It looks like we're going to trade above that 200-day EMA. We'll watch that. I would look at that as the support area. If that support area fails at the 200-day EMA, and we get a close below it, that would concern me. I would start looking for bonds to begin to move lower. But at this point, given the indicators and what I'm seeing, I would expect to see them move higher, at least test that overhead resistance at that May top. So let's go ahead and look at the takeaways I have for you. Oh, I didn't go over my ultra short-term indicator chart. This one I did want to point out, a selling exhaustion appeared to me yesterday when we had these breadth indicators that were very deeply, we're getting climactic readings. We have a penetration of the lower Bollinger Band for the VIX on my inverted scale, and that calls for a bounce. And we're getting that bounce today. I don't suspect it'll turn into much more tomorrow. I think we're about done, but I did want to point out that selling exhaustion. We may see a little bit more bounce tomorrow, but I'm not expecting a lot of good news coming out. So, all right, now let's go ahead and look at those slides. I want to first show you the DP scoreboards so that you can see where we are, those signal changes that came in. Also, let's go ahead and go to the next slide really quick. And, you know, what I'm looking at as far as the market conditions are concerned, when we looked at those indicators, selling exhaustion, near-term bullish, but everything else as far as the short-term indicators, I have that as bearish. Okay, yes, the rising trend is holding despite those negative crossovers. That is bullish, but I'm not looking at the intermediate term indicators as bullish overall. If that makes sense. I should have updated that slide a little better. I apologize. And finally, the big four: dollar, oil, gold, and bonds. Dollar, I am bearish on. It is approaching that overhead resistance, and I think that resistance will hold. Gold, I think we're looking at some sideways movement, but not much more in terms of that. No breakout. I think oil looks grand. Bonds look good as well. I'd expect higher prices. And that pretty much concludes the DecisionPoint report for the week of June 25th. Let's wrap it up now, Tom. What do you think about the dollar right now?
I love the dollar.
Mm-hmm.
I think it's going higher. You know, I've shown that one chart plenty of times where, you know, the U.S. rates are going up much faster than Germany. And even with the dollar, one chart that Arthur pulled up yesterday was the dollar has, or the 10-year Treasury yield here in the U.S. has been relatively flat, but over in Germany it's been declining. So even while our 10-year Treasury yield over the past few months has been mostly sideways, we do continue to kind of pull away from the Treasury yields over in Germany, and that is definitely sending strength. You know, it's resulting in strength in the U.S. dollar, and I think that's going to continue. So I agree with you. I do think that the overhead resistance on the dollar index is very real. We need to get through it, but if we get through it, I look for more outperformance by the small cap stocks, and I think that is going to continue to be the theme in 2018.
All right. I think that's good. I agree with you. Short term, though, I'm not liking it. It's got to get past that $25 resistance level. Well,
Yep.
I'm glad that I was back. I see that the upcoming schedule is right there for you. Scott Carney tomorrow. Looking forward to hearing from him, the harmonic trader.
Yeah, it's been a while since we've had Scott on the show, so that should be a really good one. Of course, Dan Russo has been on from Chaikin Analytics. So, and I think he promised me last time that we were going to talk a little market makers maybe when he came back this time. So maybe we can talk about the market makers and the role that they play and how you can benefit from trading as a result of understanding their role. So that'll be interesting. And of course, I'm not really sure who's coming on, whether we got Chip coming back for everything stock charts, but either way, I'm sure it'll be another great session of tips on how you can use the website. So a lot of good stuff coming up, and looking forward to the rest of the week and all this volatility and seeing whether or not the market can continue to recover.
Yes.
All right. I do want to thank everyone for joining us today. Please remember to complete the survey as you exit. We do love to get your feedback, hear what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday afternoon, everybody. Hopefully we'll see you right back here on Wednesday. Happy trading.
Here's how to add a moving average onto your indicators. Scroll down to the indicator section and use an overlay, picking simple moving average. And then you can specify the period, and if you use a colon symbol, you can also pick the color that you want to go with it, and then that'll place that right on top of your indicator like that.